Elon Musk just dropped a massive bombshell for all Tesla stock investors, and you should be very excited. In addition to that, we are going to get into the other pieces of EV news as well as Tesla stock news that you need to know on the day today, as well as what in the world is going on in the broader markets. So Elon Musk made this Twitter post or X post that says 11.4.7 should be going to wide release within a week. But that's not the biggest piece of news. Version 12, which an almost total rewrite, is 99% AI, and it's being tested by our QA drivers. Too much new code to go to the public yet, but it is mind-blowing in my opinion. Now let me explain to all of you why this is so important. The fact that we're getting more clarity on this, that level 4 is already being tested, and that is your V12 version. This is what Gene Munster just said about full self-driving at Tesla.
Second is the tech. We're not there yet. Elon thinks we're there by the end of the year, which means we're probably a few years away. And then there's the political piece to the topic, and that's what that's the pressure point today.
Even some of your Tesla bulls, some of the most bullish Tesla investors, think that level 4 autonomy could take years. And there's something we have seen happening more and more in 2023 that is really going to push along full self-driving, and that is competition. Competition is a beautiful thing because if you don't have it, then it doesn't force you to be innovative or force you to build a better product or maybe build a product faster. Well, what you're seeing with Cruise and Waymo could be direct competition to Tesla. Now, the advantage that Tesla will have is the fact that it has all of the data on America as a whole. It's not going city by city to get robotaxis. We're going to be able to deploy this thing nationwide, if not worldwide, basically at the same time. That's Tesla's major advantage. Their hurdle is getting to level 4 autonomy. This competition should be welcomed. Any positive developments in the autonomous vehicle sector as a whole is very, very good news for Tesla stock investors. Think about this quite logically. Whether it was the space race or the technology innovation in the 2000s, even think about your smartphone. Your smartphone is what it is today because competition. They have to build a better product. This is very good news. Now, we're getting some really good news as far as autonomous vehicles today. The California Public Utilities Commission just approved Cruise for fared operations 24/7 across all of San Francisco. The reason Cruise could only really operate at night, more or less, was because of traffic concerns. Sometimes, in rare instances, these vehicles would just stop in the middle of the road if they got confused. If you're doing that during rush hour, there's a problem. So this technology getting approved is very positive for, again, the competition, but also on the regulatory side. That's the next big hurdle once you get level 4 autonomy, is getting these things approved county by county or state by state. The fact that Cruise just got this approved means when it's Tesla's time to get reviewed and ultimately approved, it's going to be a lot easier. Let's now get into all of the other news that you need to know. Cathie Woods sold another $19 million in Tesla stock. She also sold Nvidia and Alphabet shares. Popular to contrary belief that if ARK is selling Tesla, that tends to be negative for Tesla stock. Well, indeed, it's the opposite. Every time we have seen Cathie Wood sell Tesla within the past year, Tesla stock has actually performed very well. So we'll see what happens this time around. But again, keep in mind, Cathie Woods is not bearish on Tesla. She has to sell Tesla because Tesla is over 10% of her portfolio. She's made that very clear long before she was ever famous for owning Tesla. Stocks that go over 10% get sold until they're under 10%. It's as simple as that. Tesla is requesting environmental permits to build its Nuevo Leon plant. Tesla Manufacturing Mexico requested environmental permits from the Ministry of the Environment and Natural Resources for the construction of its plant in the municipality of Santa Catarina, Nouveau Leon. The project consists of the construction of a warehouse for the automotive industry on a 260-hectare site located in Liberminto area in southwestern Tijuana. This is going to aid in the development of Giga Mexico. This project is representing an estimated investment of $90 million. The applications alone for the environmental permits is the first known step of a total investment valued at $5 billion. St. John Energy is going to add Tesla Megapacks at the wind farm. This is actually the second battery energy storage project with Tesla. The first project was officially commissioned in June 2023 and features 10 turbines providing 42 megawatts of power, enough to supply 15% of the city's energy needs. To help store some of the energy and deploy it during peak periods and times of low energy generation from the turbines, the company will be installing 6 megawatt hours / 12 megawatt hour battery storage site using Tesla Megapacks. The Megapacks will be able to power 3,100 homes in the area for 2 hours. Also, for the first time ever, we're seeing a Tesla semi-truck transporting a Tesla Cybertruck. Definitely a sight to see there. Two of the most beautiful vehicles out on the road today together. It's a great combination. On Thursday, GM's joint venture SGMW debuted the Bombshell Cloud electric hatchback in China with prices starting at $13,200. The new EV received 10,000 pre-orders in 10 days in China, and it's really getting publicity because of these seats. They're like cloud seats. Kind of strange, but also probably pretty comfortable. Tesla Korea will deliver the first Model Y to customers from August 25th. This is the first delivery of the Model Y produced in Giga Shanghai. Electric vehicle rebate program incentives expanded in Massachusetts. The launch of rebates at the point of sale with participating dealers. A $3,500 rebate for used EVs for income qualifying residents. A $1,500 rebate adder for income qualifying residents called More EV Plus. This is in addition to the standard rebate for newer used electric vehicles. Increased rebates for certain light-duty pickup trucks. The More EV Plus and More EV used rebates are retroactive to November 10th, 2022 for any income qualifying residents who purchase new or used EVs on or after that date. So if you're in Massachusetts, you might want to look into this. Tesla is also offering a $750 rebate to get a Powerwall installed at your home or business. This is to residents in Australia. One of Tesla's competitors over in China just cut prices, and according to Barron's, this is not a great sign. The company that just cut prices is called Zeekr. Probably not a company that you have heard of, but they do sell a decent amount of EVs. Through July, Zeekr sold about 55,000 BEVs. Tesla, for context, has sold 294,000 BEVs in China. So Tesla delivers about 6 times more vehicles, so these are not the same companies by any means. But Zeekr does sell a decent amount of EVs. Now, Zeekr just cut their prices on their Zeekr 001 models $5,000 on average, and base prices now range from about $40,000 to $52,000. The Chinese Model Y starts at about $40,000 and is as high as $55,000. That's down from $43,000 on the low-end model for the Model Y since the beginning of this year, and $60,000 on the high end, which, if you put it into context, a $3,000 drop on the low end, a $5,000 drop on the high end, that's not a huge amount, and it really shouldn't be something you should be concerned with as a Tesla investor. But Tesla stock has definitely seen the wrath of those price cuts in China. Nonetheless, the EV industry in China has been, quote, solid through July. About 3 million battery electric vehicles have been sold, up 23% year over year, according to Cine analyst Jeff Chung. As far as the macro news that is affecting the markets today and sending the NASDAQ down about 0.8%, as well as tumbling Tesla stock over 1.5% in the red today, it is PPI month over month. PPI month over month for the month of July came in at 0.3%. You were expecting 0.2%, so a little bit hotter than expectations. And if you annualize this, that is 3.6% on a 12-month annualized basis. 0.2% is more in line with the Fed's 2% target. That would be 2.4% on an annualized kind of 12-month basis. So this was a little bit hotter than expectations. Now, why this is potentially negative is because PPI stands for Producer Price Index. CPI stands for Consumer Price Index. You see the similarity there. PPI is the producer side, the wholesale side, the companies that produce products and services. If they see inflation, typically consumers see inflation. But usually it starts with PPI and then goes into CPI, because typically producers, if they get higher prices, they then raise prices. That's typically how business works. So if PPI is high, then it likely means CPI is going to go higher. And that's why this is a negative. But again, just so you guys know, negative PPI or negative CPI month over month is actually very bad. Deflation is like the worst thing that could happen to an economy. And that sounds rough to say after the last 18 months in the markets. But look at the Japanese stock market. They've seen deflation in the 90s, and their stock market peaked in 1989 and has never recovered and broken a new all-time high. You don't want that market, where the markets are down for 40 years and never break a new all-time high. You don't want deflation. Deflation typically means a recession. China is actually seeing deflation right now, with prices falling 4.4% in July on the Producer Price Index. So you don't want to see really negative PPI or CPI. Keep that in mind as we do go through the rest of this year, especially heading into 2024. Negative CPI, negative PPI likely means a recession is right around the corner. So this kind of pushes back on that recession narrative a little bit. To the PPI report coming in hotter than expectations, the 2-year Treasury is up 7 basis points on the day, sitting at 4.89%. The last time you were this high was back in October of 2022, as well as in March of 2023. These were both not great times for the market. And same story with the 10-year Treasury. That is up 8 basis points on the day, sitting at 4.16%. The higher these bond yields go, the worse it is for credit. The harder it is to get a mortgage rates go higher, auto loans go higher, credit card rates go higher, and the likelihood of corporate bankruptcies also goes higher, because you got to pay a lot more interest in the bond market if you want to raise capital as a company. If you could get almost 5% in a 2-year or 10-year Treasury, good luck going to the bond market as less than a AAA rated company and getting a corporate bond issued to you for less than 6 or 7%. Those are unsustainable rates given how indebted companies are today. You are also seeing that the 2 and 10 yield curve inversion is starting to steepen. Now, let me break this down very simply. You should not get paid more for lending your money out for 2 years rather than 10 years. And let me break this down simply in an example. If I wanted you to loan me $5,000 of your money, and I said, hey, give me $5,000, I'll pay you back $7,000 in 2 years. Okay, fine. That's acceptable. Well, what if I said, lend me that $5,000 and I'll pay you back $6,000 in 10 years? Which one are you going to go with? You're going to go with 2 years, get paid more, and get your money back quicker. That's a real life example of how this thing works. You should not get paid more for lending your money out for 2 years rather than 10 years. But long story short, what that means is we're expecting higher rates in the short term and lower rates in the longer term. 10 years down the line, expecting less growth, expecting the Fed to need to cut rates at some point in the future. Now, when the yield curve inverts and you actually do get paid more for lending your money out short term rather than long term, well, that has always preceded a recession. If we do have a soft landing and don't get a recession, this would be the first time ever this has happened. So it's kind of important. Even back before the COVID recession, back in August of 2019, the yield curve inverted for literally 1 day. 1 day did the yield curve technically go inverted. That's all it took. And then a couple months later, by March of 2020, you went into a recession. Maybe someone knew something. You could argue that at that point, right? But even back here in 2000 and 2008, when you're inverted and you steepen, you tend to get the pain after. It's not the inversion that typically gives you the recession. It's the steepening. And what you have seen recently, let me blow this up and make it a little bigger, is the yield curve was actually inverted over 1% back here on July 3rd. Today, the yield curve's only inverted 73 basis points. That would be 0.73%. So your yield curve has inverted or uninverted by about 25% already. Typically, when that uninversion happens and this chart goes up, that's where the pain actually happens. So I think under the surface, that is something the markets are also kind of panicking about. Tesla stock today is seeing a positive order value of 41%, which given the carnage that is taking place out there today is not all too bad. $138.2 million worth of options have been bought in Tesla stock today. 646 hedge fund and institutional trades. Tesla stock is trading at $242.68 at the time of recording this video, recovering a little bit as we are speaking, and you're really fighting around that 240 level. I don't think Tesla breaks under 240 unless the markets are selling off themselves, in which I've said this before and I'll say it again. Look at the NASDAQ and then look at Tesla. They pretty much look the same, but Tesla tends to fall more than the markets during bad times, and Tesla tends to rally more than the markets during good times. And that's exactly what has happened. So any more downside from here would be due to a broad market sell-off and the residual effects that it has on Tesla stock. 240 is a major level of support. If you break under that, your next stop is around 220. And let me tell you right now, if you're a long-term investor heading into 2024, to get shares at 220 is a steal of a deal. If you could get shares at 200, if the markets really do plummet, that's going to be even sweeter. The RSI is trading at 39.92, so quite oversold. The last time you were this oversold was back here April 26, 2023, and Tesla stock was $150 per share. So you've seen a lot of selling recently. The RSI suggests that maybe it's time for a bounce. The MACD, on the other hand, just went negative and looks pretty dang negative. So that does maybe say some more downside could be in the cards. The 100-day moving average is sitting at $218.77. Again, like I said, that 220 level, plus or minus a couple dollars, is that next level I would watch if you break under 240. The 50-day moving average is currently at 257, and that's where we could expect to see Tesla go in the event that we do bounce, possibly next week. Next week, we don't have a lot of economic data. We don't have much going on. I believe we hear from Fed Jerome Powell next week, and that could be the biggest catalyst, but the markets right now really don't care about the Fed. We don't expect many more rate hikes. Maybe one more, fine, not a big deal. If the Fed pauses, fine, not a big deal. It's not until the Fed actually cuts rates or something breaks in the economy that the markets are really going to care. That's the bottom line. So any economic data from now until the end of this year is going to be very important, especially if it says we're going into a recession or avoiding a recession. That's what the markets need clarity on. How bad could this be in 2024? That's what the markets really want to know, and that's why stocks are slightly selling off. The fear is somewhat growing that maybe we do go into a recession by the end of this year, if not in 2024. That's exactly what we're going to talk about in the next video coming out at 8 p.m. today. So stay tuned for that one. Information you really need to hear in that video. And let me tell you, pretty bullish for Tesla. and not so good for the broader economy. So, with that being said, hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys want to come hedge your portfolios, not just sit on your hands and watch your portfolios die in front of you, come trade with us, come hedge with us. Link down below in the description of this video. Thank you for watching. Most importantly, enjoy the rest of your day and your weekends, and I will see you in the next one.